There are many reasons that a person may save for the future. They might be saving for their child's college. They might be saving for their retirement, or a plethora of other reasons. But oftentimes when a person has a child with a disability, they are saving money for that child to use in the future to enhance their quality of life. Now, we've talked before about the benefits of establishing a special needs trust to protect those funds so that you can enhance your child's quality of life without harming their eligibility for specific benefits. But a lot of people ask me, how do we get the funds there? And we're going to talk exactly about that today. Hi, my name is Elizabeth Larson, and for all the information on special needs planning, make sure that you hit that subscribe button and the notification bell to make sure that you're notified every time that I post new videos. So the path to funding a special needs trust is going to differ depending on where the assets are coming from and what type of trust that we're trying to fund. It's important to remember that any assets that belong to the beneficiary have to go to a first-party trust, and any assets that belong to anyone else go to a third-party trust. So first we need to ask ourselves, where are the funds coming from? If they're coming from a personal injury settlement, they'll most likely go to a first-party trust because those are the assets of the beneficiary. But if they are coming from, a parent, a sibling, aunt and uncle, a friend, anybody else like that, those will go to a third-party trust. Now remember, the third-party trust has the benefit of not having that Medicaid payback provision that the first-party trust has. So it's really important to know that you're putting your assets into the correct type of trust to make sure that we're not going to inadvertently lose assets unnecessarily. So today we're just going to be talking about the third-party trust. How do we fund a third-party trust? Well, it's really important that when you sit down to speak to your attorney who is drafting the special needs trust, that you explain to them exactly what assets you want inside the trust. Some people, they only want a life insurance policy in the trust, while some other people may want all of their assets directed to the trust. But having this conversation with the attorney is going to make sure that your wishes are fulfilled at the end of the day. So after you have that conversation with your attorney, they will provide you with what is called funding instructions. And these are going to be crucial because they are going to tell you exactly what accounts need to be maybe retitled or have beneficiary designation changes on them. Now, as we discussed in my previous video, should life insurance be used to fund a special needs trust, we know that life insurance can be a key tool in the funding of a special needs trust. But there are some considerations that we have to take when determining whether that's the right option for you. So many people are aware of term life insurance policies. And this might be a really inexpensive way to fund a special needs trust, but it's crucial that you understand how these policies work before you choose that route. So term insurance policies, they are inexpensive for a certain period of time, whether that's 15 years, 20 years, 30 years, whatever the term is. But once that term has expired, the policy doesn't just go away. What happens is the premiums jump up significantly, and oftentimes it jumps to a price that people can't justify affording. Then there is the second to die policy or the survivorship policy. And what these are, it's a life insurance policy that covers 2 lives, but doesn't pay out until after the death of the second person that is on the policy. So these might be, again, a cost-effective way to fund a special needs trust, but they do come with their own caveats. You need to think if the breadwinner is the one that passes away first, that money, that life insurance money, may be needed just to pay for ongoing expenses, day-to-day living for the remainder of the family's lives. And then if the caretaker is the first one that passes away, then maybe they need those funds to be able to hire someone to come take over those caretaker responsibilities. Now, whole life insurance, which covers just one individual's life, might be a better option because not only do the premiums stay fixed throughout the life of the insured, but the money is accessible immediately at their death. It also has tax benefits, so that is something really crucial to think about when you are funding a special needs trust. So let's talk a little bit about real estate. I get the question, can I leave my home to my child frequently? Parents worry about, if something happens to them, where will my child end up? So they want to solidify a place that will be theirs no matter what. And that's great. The answer is yes, you can leave the home to the child, but that also does open them up to vulnerability for exploitation. So what I recommend is more often that people would leave the home to the third-party special needs trust. Not only would this protect the home from that Medicaid payback provision, but it would also, if the child needs to relocate and sell the home, those funds can go into the special needs trust so that they don't lose their eligibility for those crucial benefits that they may need. Now, much of a person's savings ends up being tied up in 401ks, IRAs, 403bs, things like that. And so a lot of times people want to leave their retirement account to their child. And there are very specific rules when it comes to distribution of retirement accounts for beneficiaries, so it's really important that we discuss this. Now, back in December of 2019, Congress passed what is called the Secure Act, and this changed the rules on retirement accounts and how they are to be distributed. Before that, people would be able to stretch the payments over their life expectancy, so they wouldn't have to make these huge tax payments every single year. But now that has changed. Now, in most cases, the entire account has to be distributed and gone out of the account 10 years after the account owner had passed away. But there is a special rule for a special needs trust or a person with a disability. Under the Secure Act, a person with a disability or a special needs trust is called a eligible designated beneficiary, which means that they actually do get to continue taking those payments out of the IRA for their life expectancy, not that 10-year rule. Now, required minimum distributions will still come into play, but they won't have that tax impact that they would had the account needed to be completely distributed in that 10 years. Now, when it comes to retirement accounts, a Roth IRA may be a better option than a traditional IRA because any distributions that come out of that Roth IRA are income tax free, just like a life insurance policy would be. Now, it's crucial that before you decide to put a retirement account into the trust, you do speak to your attorney and a financial advisor who has specialized knowledge in this area to help guide you. I hope that you found this information to be helpful, and while yes, there are some general basics when it comes to special needs planning, it's crucial, it's so important that you actually go and speak to an advisor who has specialized knowledge in this area of special needs planning for your specific approach. Now, if you liked this information that you heard today, please make sure that you hit that subscribe button and the notification bell to make sure that you're alerted every time that I post new videos, and please share it with a friend. Now, if you're watching this and you are a family who is ready to start getting the support and the consulting that you need, this is for you. If you are ready to put together a sound plan that's going to get you from now until forever, this is for you, because that's what this is. This is a lifelong partnership that takes constant development. Now, if you're here for some free content and information, that's what this YouTube channel is for, and welcome, thank you for coming. But if you are ready to get serious about planning for you and your children's future, please contact me for a strategy call. Click on that link below for a strategy call so that we can start the planning process for you. Now, I want to thank you for watching, and remember that planning for the future today leads to a confident tomorrow.